What's up, guys? This is Rey-Jay back with another video. And in this one, I want to talk about what's happening with the overall market and dissect SPY and Amazon using very useful tools that can help you guys understand what's happening right now. Just know that I am not a financial planner. Take nothing I'm saying as financial advice. Anyways, the market's been on a tear, making new all-time highs for SPY and the QQQ. But the first question I'm being asked is this a good opportunity to start buying up the markets as we continue to push? If the market keeps going higher, should we start to FOMO in and just keep on, going higher, keep on buying things up? Or is it a better strategy to be very careful with the buying because of what we're seeing on these charts? Well, the first thing I want to say is that there's a big dichotomy right over here between many of these tech stocks and our indices and ETFs. SPY, for example, is approaching the all-time high. It's actually breaking the all-time high. But despite that, there are still a lot of gaps that are left here. There's lots of unfilled gaps left here. And that does make me suspect that there will be eventually a time we come back down, whether it's, sometime at the end of this year or next year, there's going to be another corrective phase. So I wouldn't say that this is the best of opportunities to buy. But I do see this as a potential trading opportunity as we could still scalp this to the upside, at least for the time being. So I'm going to be using a very useful tool known as Forecast to kind of talk about this. When you look at the current year, the market is doing something very unusual. What typically happens is the market slowly pushes as we approach that July period. And then we tend to be more volatile. We tend to kind of correct in September and push even more. But this year, the way the market looks is we basically saw all-time highs. We dumped and then made a V-shaped recovery. So it's very volatile. The market's moving very hard compared to previous years. For example, look at the last couple of years like this. The market was just slowly uptrending. The market tends to move slowly. This year was very volatile with a huge dump with the tariffs, only for us to make a V-shaped recovery. So with that being said, how is the market looking? Are we overbought? Are we oversold? Let me just say this. What typically happens, and you guys can actually look at what happens on a daily basis, which days tend to be more bullish or bearish looking at historical trends. But one thing that's worth mentioning on the monthly chart is that when we approach the month of June and July, we do tend to be more bullish as longs tend to be more advantageous. These are very bullish periods. May through July tends to be very bullish, but August through September is when things could kind of turn a little bit. And that's why you want to be very careful on a seasonality basis. Now, that does tell me that there is still some more upside potential as we approach the month of July. The market's not super overbought yet, but we're very close to becoming overbought. And we're still quite neutral. So yes, I could still see SPY push higher looking at our DPO indicators and such. We're also not extremely greedy, extremely fearful yet when it comes to other market mood meters. We're still in a very interesting place. Now, can the market go higher? Yes, it can. But I do want to warn you that we're getting very close to being overbought. And when you look at our other indicators, we're still at these very high valuations, which is typically not the best of places to be buying the markets up. Now, you could go long temporarily if you want to like day trade, maybe catch some upside temporarily. But I'm talking about going heavy into buying shares for the long term. I do not consider this the best of opportunities looking at where we currently are. Now, another reason why I say this is because when you look at Amazon, right, we can actually use Forecast to kind of look at these balance sheets and you could see everything broken down very nicely. So if you look at Amazon, 2024 was a nice year. We saw a lot of growth. The revenue had nice growth relative to 2023 on a year-over-year basis. And there was just so much growth in 2024. Now, if we go 12 months out, we're still looking really good so far, good growth. And then the revenue growth has been decent, but their expenses are actually dropping just a little bit. At least so far, they're trying to bring those expenses down to kind of offset these tariffs. That's what Amazon's been doing. So it's very resilient. It is dependent to some extent on Chinese policy, but for now, it's doing well. Now, with the current rally, we're actually nearing an overbought position, which is why it's not typically ideal to be buying Amazon way too hard at these high levels. But it is tradable. You guys can scalp this as we go higher and higher. But I do want to warn you guys against being way too bullish in a way where you just go all in at these levels. Part of the reason why I say that is because it is possible we try to push higher and you could try to scalp this as we try to push closer to the 230s. But I do want to warn you that one day, whether it's this year or next year, as we're already overbought here, whether we push it a little bit higher, there's going to be a risk of us returning to fill some of these gaps. Eventually, Amazon will return to the low 200s or even back down to about 193, and those are going to be much better opportunities to start buying. There's even a gap all the way down here at the 170s. So we're going to see what happens. Could we, end up seeing a correction because of a recession? What's going to be the factor? We'll have to see about that. That's going to be very, very key for us. But for now, it is possible that we do rally a bit. You could play this. You could buy it up a little bit. You guys could scale this. You could do all kinds of different things with this. Scalp it, whatever you want to do. Swing trade. Yeah, you could be going higher temporarily. We have good fundamentals, a lot of good news coming out. We're also not in a sell position yet, according to our DPO indicator on Amazon. So when we form these tops on Amazon, sometimes you get these like sell ratings. Even right here, you got a sell rating. And as of right now, we're still rallying, so we could be pushing a bit higher. But there will come a time when we correct, which is why I do want to warn you guys not to be loading the boats too heavy on shares. I'm not going to be doing that for now. I'm going to be waiting for a nice, meaningful dip for us to enter. The dip may take many months or even another year, but I'll be ready when the time is right. So keep that in mind. For other tickers out there, we also happen to have, SPY and the QQQ. They're at all-time highs here, but like I said before, you want to be careful because the QQQ has insane amounts of gaps left. There's a gap at 531, another gap down here. There's actually a gap technically unfilled at 508, another one at 489, another one down here at 446. We're going to fill at least half these gaps. There's going to be another corrective phase eventually. But I see it as another buying opportunity once the time finally comes. SPY is eventually going to come down to fill some gaps. So that's when I will be buying at least a lot heavily. So could we go higher? We could rally another 10 points, another 15 points. I'm not saying we can't do that. I'm just saying that I don't consider this the best buying opportunity as we're so, I wouldn't use the word overvalued. I'd say that we're at such a high valuation, breaking all-time highs, and that's ideally not the best of places to be going too heavy when it comes to longs. Also, Amazon's kind of playing the game of catch-up right now, looking at the valuation. We're not necessarily in a sell zone. So I still think Amazon could rally. We could be looking for a rally to like the 230s, depending on Chinese policy, what happens with President Trump's tariffs with China, what happens with the trade deals that are coming out. But for now, there is upside potential for Amazon. I just want to warn you guys to be careful, though. There are, potential dips that will be coming in the future. There are gaps to fill. And the best way to really see them would be to be watching to see if we get sell ratings. Right here, this was like the perfect top that this caught right here, even like right here. We did catch a temporary top up here with this first sell rating. This is actually when Amazon dropped 5%. So we're going to see if we get another sell rating the higher this goes. And then that's going to help us kind of like figure out where this is going to pivot just temporarily. And then if we do get a big correction, when Amazon was dumping from like the 200 area, this was when we got some buy signals from our very important advanced DPO indicator. We were continuing to get buy indicators, and this was telling us to dollar cost average buy, because you would have made a full recovery from that. So that just goes to show how useful this indicator tends to be. And then for SPY, the same thing. This was screaming buy at the 550s and buy at 504 when we dumped after the tariffs were announced. And instead, we're just continuing to rally. We're still looking very, very bullish nonetheless. Could we go higher? Yes, we could go higher, but I just want to warn you guys that I'm not going to be buying way too many shares up here. For the QQQ, the same thing is going on. It's very, very bullish. And then historically, when you look at the trend, we're actually at all-time highs here. We're very much at a high valuation. We could be going higher looking at these indicators. Historically, what happens to the QQQ is June tends to be very strong, but July tends to be a little bit weaker compared to like SPY, at least for the QQQ, before we start to see more upside again later on. But we still have upside potential for another couple of weeks looking at seasonality. But as we get to like mid-July, that's when you want to be a little bit more careful with the QQQ. Also, the QQQ is near overbought territory. It's not necessarily in a sell phase. So could we go higher? Yes, we can, but there's no sell signal yet up here, which goes to show that we could be going higher. Until this shifts, I would be very, very careful. Right now, SPY and the QQQ are very much at high valuations, breaking all-time highs, but many tech stocks like Amazon are still not there yet. So that could really drag us higher, especially as futures have more potential. So my answer for all the people out there asking me, is this the time to buy stocks like crazy? Well, to some extent, you could scalp, do all kinds of different things. You could even like swing trade some upside. Yes, we can. but I'm not going to be going long way too hard yet. I'm going to be waiting for a meaningful dip, and I do think it's going to be coming one day. There's just too many gaps left, and the market obviously has bearish divergences that are still developing, but there's no sign of us seeing them panning out yet, so we have to be very patient. For my Amazon traders, Amazon's very dependent on China, but their numbers, their PE ratio, their sales look very, very good, and they're still trying to cut costs. So that's a good sign that Amazon's very resilient. We could be climbing higher, so I could be trading this, but be careful because I would not be buying way too many shares up here. I'd wait for some meaningful dips. And we will eventually return to the 210s, if not the low 200s and 190s again one day. I do believe that. I don't know exactly when it's going to be, whether it's in a couple of months or even like next year. What's the catalyst going to be? Is it going to be a recession? Is it going to be another war? We'll see about that. But nonetheless, I'm just here to give you guys a warning about that. So Forecaster is very awesome to look at things like this. If you guys want to look at their numbers, if you want to look at how Amazon's looking, if we're nearing a very, very good buying opportunity or not. If you're interested in looking at all of that, guys, you guys can check out my link down below to sign up. You guys can see very, very good metrics to understand what their revenue looks like and then how companies are doing. So this is a very, very good tool you could use for long-term investing if you guys are interested. Anyways, I thank you all so much for listening. So please enjoy the rest of your guys' days. I'll see you guys very soon on the next one. Thank you for listening and peace out.